We've discussed a bit about search fund, obviously, but do you think you could spend a bit of time to really describe what it is? From start to finish, a lot of people, I mean, myself also, I mean, we've read a lot about like search funds or heard about search funds, but if you could describe the model, which is different from private equity funds, for example, which is different from setting up your own company, etc. From start to finish, if you could walk me through the life of a search fund and describe exactly what it is, that would be super helpful.
Yes, sure, sure. So maybe in a single sentence, essentially a search fund is an investment vehicle where
Mm-hmm.
one, or in our case, two people raise capital from investors to find, acquire, and then operate a single small or medium-sized business. At that point, it's also important to state that there are different forms of search funds. So there's a self-funded search fund, and there's the
Mm-hmm.
traditional search fund, which is the one that we are doing. So if you break down the steps of the search funds, there are essentially 5 stages. The first one is raising search capital, which means that, either the duo or the one searcher raises initial funds from investors to go on a search. That means you can cover your daily expenses, you can pay for due diligence, you can pay for an office, and essentially you have a time period of 2 years to find a suitable business.
Mm-hmm.
At that stage, that's also how it differs to the self-funded search fund, because the self-funded search fund, as the name implies, doesn't require initial funds from investors. The searchers themselves use their own capital to go on a search.
Mm-hmm.
That's how those two models differ. The second stage is the search phase. So, as I said, in the traditional model, you have 2 years to essentially identify and evaluate a potential target. In the self-funded search, this is slightly more flexible because you don't have a time period of 2 years. Once you've found the business, you enter the third stage, which is the acquisition. So once the target is found, the searchers work together with the investors to raise additional capital. So in the first phase, the search capital phase, we raised one amount, and then in the acquisition phase, we raise a second amount to actually purchase the business and then complete the
Mm-hmm.
acquisition. The fourth stage is the operation. That means that the searchers essentially enter the business, either as CEO or as managers. They take over the day-to-day management. They aim to grow and improve the company, and they use the support and the mentorship of the investors that have given them money for the acquisition. And then the last stage, that's essentially the exit. And there are many forms, because search fund doesn't necessarily mean that you have to sell the business. It just means that there needs to be some sort of liquidity event to the investors, because to the investors, this is still an asset class. It's a way of allocating capital and to
Mm-hmm.
receive or to achieve their returns. And so essentially the exit phase might either be selling the business or buying out the investors, and staying as a searcher within the business, which is actually what has happened very often in the German ecosystem, within the search fund space. A lot of searchers have stayed in the business for 10 or 15 years.